News Radio 700 WLW.
Economy-wise, it's tough out there because of prices. Prices of everything is higher.
Yeah.
Restaurants, coffee, basic groceries, everything is. And I saw this article, and I knew it was going to give us a good chance to talk to our next guest. But, yeah, why Gen Z is embracing trade-down economy. And essentially what that means is, and I think we all do this, whether you're Gen Z or not, you kind of forego maybe this, and this pleasure to have that one. I mean,
right.
Other than that billionaire you were talking about earlier who can have whatever he wants whenever he wants, everybody's sacrificing something to some degree. But I thought it was interesting, again, particularly as it pertains to this economy. So we have joining us right now. His name is Steve Cotton. He is a financial strategist. We always enjoy having him on the show. Steve, welcome to the program. How are you?
Well, I am just doing great. It's an honor to be with you today. Thank you for inviting me.
Always a pleasure, Steve. So yeah, let's talk about that. Like with how high prices are, and yeah, whether it's Gen Z or otherwise, what are some of the common things right now that people are saying, you know what, I can do without that and that, but I still want to be able to enjoy this?
Well, I think COVID is the one that really is the element that really threw the whole nation's economy into this period where we're re-examining our spending. And it's not just Gen Z, but I think we're seeing it manifest with Gen Z in that they are becoming more discriminating about what they spend. Now, they still spend a lot of money, but it's so expensive to go out and drink and eat. And the thing that surprised me the most is how a lot of Gen Zers are reducing their alcohol. That was not something I would have predicted.
That's what I was going to say. So Gen Z, the age range is 13 to 27. I have to look it up because millennials, Gen Zs,
right.
I mean, there's so many. Born 1997 to 2012, and this is the generation that is saying no to alcohol more than any other generation. And I think that's great. But they're buying stuff like Coach bags and stuff, which is interesting.
Yeah, they still want to spend on things that make them feel good, but they are getting more discriminating about stretching their dollars. And frankly, I think that's a good idea too. We've had the softer job market. We've had employers that are a little slower at hiring. Changing jobs is a little bit more difficult than it used to be. There's more risk out there now, and I think the Gen Zers are at the forefront of feeling all of that, and I think they're just becoming more discriminating consumers, and I think that's a very good thing. I really do.
So I'm 45 years old, Steve, and so I'm either, depending on what chart you look at, I'm either 1 year, like the last year of the millennials, or just outside. I prefer to think that I'm just outside the millennial category. And I feel like, especially like my generation, whatever you want to call it, were the ones that made fun of maybe even the Gen Xers is the ones that spent $27 on a range-free duck egg salad when, you know, like my generation, certainly generations before me, could eat a can of tuna and a peanut butter and jelly sandwich for lunch and have a nickel cup of coffee and be fine with it. But it sounds like even those Gen Zers are now coming back to reality and say, like, what's important here? Like, you know, spending a ton of money on some gourmet food item at lunch, or maybe more of the essentials, or at least other things that I prefer more.
I think that's right. I think they're getting more discriminating in a couple of ways. For one thing, they're wanting more things for free or at low cost. They are wanting more for less. And, you know, that has its pluses and minuses. But I think with limited funds and, you know, with student loan payments kicking back on and them having to deal with that, I think they're just being squeezed. And it's not just them. You know, when my wife and I go out to dinner, we can't go anywhere that serves alcohol for less than $100 a dinner,
yeah,
which is ridiculous.
Yeah, I totally agree. And so prices are not going to get lower. I don't see that happening. And if they do, it's not going to be by much. What, is this going to be like a trend that they're, because I read the article and I even saw like they're turning down Chipotle and stuff, which isn't even that expensive, for some people maybe, but yeah, it's not dinner at, alcohol and $100, so are they just planning on, or many of them eating at home from this point?
Well, I don't think more of them are cooking at home. They may be eating at home. But I think it is a trend. I think it's here to stay. And I think that it's putting a lot of pressure on restaurateurs to recalibrate their price lists. Restaurant business is very thin margined. Yeah. It's a very tough business to be in. Restaurants are here today, gone tomorrow. The restaurant enjoying public is very notoriously fickle, and this generation is extremely fickle and very versatile, and they get bored easily. So if you're a restaurateur with high prices, you do that at your own risk, because these are the customers that will leave you quicker than anything.
And Steve Cotton is our guest. He's a financial strategist. And so if folks, again, especially Gen Zers, are spending less on food and going out to eat and restaurants and all that, is there anything in particular they are saving their money for? Anything they're buying more of that maybe other generations did not?
Well, I wish I could say that they were more serious about saving and investing and building up a financial freedom fund.
Okay, so they're not starting, Roth IRAs and savings accounts and all that. It's other stuff.
No, it's other stuff. We are still captive of this consumption theology in our economy and our society. We're still captive of immediate gratification, and the younger generations are particularly captive of that. But I just wrote a foreword for a colleague's book, a new book that's coming out soon, that's entitled $20 to $100,000, How to Get Started Saving for Your Future. Excellent little book. And if they would forego 2 or 3 Starbucks, and put $20 a week into a Roth IRA, they could very well get to $100,000 much more quickly than all their colleagues. And that's really what the younger generation needs to do, because Social Security is broken. It's going to go bankrupt. Congress will not let it go bankrupt. It politically can't do that. But Social Security is going to be a supplement to the younger generation's long-term retirement strategy, not the core.
Steve, I wish I would have done that when I was, 22 or even 17, because I've always been making money from 16 and on. I've always had 2 or 3 jobs. So that's great advice. When you mentioned Starbucks, I was going to say, I saw the videos on Instagram and YouTube and that kind of stuff on the barista little things. They're 17 to 23, 24-year-olds that are buying those barista like cups at Starbucks for in handfuls. Is that because it seems like they're wanting more things than eating out or experiences, which most people our age, well, Rocky's not even my age, I'm older than he is, but like most people were taught having experiences, going out and being social with your friends. It feels like they're going less of that and more of like the things or the novelty stuff.
I think they are to some extent, although I don't know that that's a trend that's going to be with us forever. I think as these generations grow and mature and take on, their 3rd and their 4th job, and they start saving to own a house, or, they partner with someone and they start making decisions together, these trends change. And I think the biggest problem that we have is we do not teach financial literacy in schools.
Mm-hmm. Yeah.
That is a disaster, because we may graduate somebody from high school or even from college with a degree, but no one along the way has taught them how to beware of credit card debt,
yes,
how to buy house, how to buy a good car, how to negotiate for a car, why they may need life insurance at some point. They're not taught those critical life skills about financial literacy, and I'm a big advocate of that. State of Texas, Texas Education Agency just put in place a financial education curriculum. They're just starting that in Texas schools, and I think it's long overdue, and it's great.
That is great, and again, I think that's something everybody would agree with.
I don't know why we
they
aren't
teach that in
taught.
school. Do you know why? I mean, and any reason or any thought as to why they don't do that in schools?
Well, I don't have a good answer for that. I've never had a good answer for that. And I didn't realize the importance of financial literacy until I was in my 30s and 40s, and job changes and career changes and, living paycheck to paycheck. And it wasn't until I finally got smart about that kind of thing and built a financial services business on my own and really saw the power of making good decisions early. That's when I became a really strong advocate of this. But if you don't come from a family where financial literacy is taught or even understood, you just never learn it. And I think we do our kids a great disservice by not preparing them for life in these very important ways.
And you see those videos and stuff all the time about, even at age 18, if you just take 200, $50 a month, whatever the number is, and you just consistently put that in, but how much you'll eventually get by the time
compound interest.
Compound, the eighth wonder of the world, right, Steve? You know all about that. Exactly. And how much different it is if you start seemingly not a big deal, but 5 years earlier than,
Right.
It's extraordinarily more.
Well, it does really work. And I've counseled thousands of people literally in the 25 years I've been in this profession. And I had a middle-aged man come in crying in my office one day. I said, "How can I help you?" He said, "I've got $200,000 of credit card debt and I just lost my job."
Oh.
And that was the most I had ever seen to that point until the next week when another middle-aged man came in who had just lost his job, a former high-flying executive. He said, "I got $400,000 of credit card debt."
Wow. And look,
that's hard.
and obviously, as you know, Steve, it takes discipline, but I will say it is harder now than ever because there's so many damn things to buy. Like in the 1950s, you know what I mean? Like there just wasn't that much stuff.
And it's easy to buy it. Just get on your phone to
Boom.
Amazon, and it's at your door that
Donna.
day.
Yeah, so easy. Yeah.
I can
it
see
is
how
easy,
people get into credit card debt. That is for sure.
Yeah, I'm on Instagram quite a bit, and I'll buy things I see on Instagram that I think I need.
Exactly. I need
like
that.
Neurogum.
After this one, that's it. I'm done.
Not
right?
doing it again.
It's coming in from India or China or Vietnam or Cambodia, and takes 2 weeks to get here, and it's an $8 item, and I had no idea it was coming from overseas. But I think we do our kids a great disservice by giving them credit cards early. And of course, the credit card companies swoop down on them like predatory birds of prey when they're in college. But nobody teaches our kids the hazards of credit card debt, and nobody taught them about school loan debt either.
No, and nobody taught me for a while until I saw what Susie Orman said. Do not just pay your monthly on your credit card. This is a long time ago, but I did not know that I'm paying 23% interest if I don't pay off the card. I was just paying. Your monthly minimal payment is, and I was like, okay, it's $26, whatever. And that's what I would do. And Susie Orman came on and said, you don't do that. You don't do that.
You're paying forever,
You're
right?
paying forever. And guess what? You're paying 1,000 times more than you would have ever paid.
It was a few years ago, and I remember because I worked in the U.S. Congress passed legislation that required credit card companies to put a calculation on their statement every month.
Yes.
Of if you just pay the minimum, it will take you 7.5 years to pay off this debt. that was a step forward, but the credit card companies have far too much influence in Congress.
Yeah.
They are financial vampires, and we get kids hooked, and then if you're an hour or a day late on making your payment on time, they jump you up very deliberately into a penalty rate, 22%, 29%, which is usury, and it ought to be against the law.
It should be. I agree 100%.
Preach it, Steve. High from the mountaintops. And listen, Steve, this has been fantastic. Really appreciate your time on this. If folks want to find out more about you and what you do, where can they go? What can they do?
Well, we have clients all over the country. In fact, we have some overseas as well. But we're a financial planning and wealth management firm. We just help people solve problems. There's no sales agenda. I have a website, cottonwma.com, cottonwma.com, COTTON. And we just like helping people, and we operate with the strictest integrity, and we just are problem solvers.
That's great.
Steve, you're the best, man. Thank you so much.
Well, thanks for having me.